All right, let's dive into some of the biggest, most common questions that, let's be honest, we all have about money. We're going to talk about everything from printing more of it to why buying a house feels completely impossible, and we're going to do it without all the confusing jargon.
So, let's kick things off with the big one. The question that has probably popped into everyone's head at some point, right? If a country is struggling or people need help, why not just, fire up the printing presses and make some more cash? Problem solved.
Well, the answer, in a word, is inflation. See, at its core, printing more money doesn't actually create more wealth or value. All it really does is dilute the value of the money that's already out there.
Think of it like this. Imagine a tiny little town. Everything's perfectly balanced. Now, what happens when the government just dumps a bunch of new cash into this system without creating any new stuff, in this case, spread? Suddenly, you have way more money chasing the exact same amount of goods. So what happens? Prices explode. Everyone technically has more dollars in their pocket, but they aren't any richer because each of those dollars now buys less. The key thing to remember is that money is just a symbol for actual real-world value. You can't just print more food or cars or houses into existence.
And look, this isn't some abstract economic theory. This has happened in the real world with absolutely devastating results. Just look at Germany after World War I. The government printed money like there was no tomorrow, and it led to what's called hyperinflation. Their money became so worthless that people were literally using it as firewood because it was cheaper than buying actual wood. That is the very real danger of just printing more money.
Okay, so if rising prices, inflation, are bad, then falling prices have to be good, right? I mean, cheaper groceries, cheaper TVs, that sounds pretty great. But here's the thing with economics. Sometimes the opposite of a bad thing is another even sneakier bad thing. Let's talk about deflation.
With inflation, your cash buys less and less over time, and yeah, that feels like you're getting ripped off. But with deflation, the complete opposite happens. Your money actually buys more tomorrow than it does today. And while that sounds amazing on the surface, it creates this paralyzing effect. Think about it. Why would you buy a new car today if you knew for a fact it would be cheaper next month? You'd wait.
And that's the deflationary trap. Everybody waits. Because everyone is waiting, businesses start losing money. Then they have to lay off workers. Now those workers have even less money to spend, which pushes prices down even further. It's this vicious downward spiral. Japan actually went through this in the 1990s, leading to what economists call a lost decade, because the economy just stalled out. So a little bit of inflation actually keeps the economic engine humming. Deflation is like pouring sand in the gears. It just grinds everything to a halt.
So, if governments can't just print money out of thin air, how do they pay for everything? Well, they borrow it. And that leads us to those absolutely mind-boggling numbers you hear about all the time on the news, the national debt.
Just take a second and look at that number. That's in the ballpark of the U.S. national debt. It's a number so huge it's almost meaningless to our brains, but it does raise a pretty important question. Who exactly is all this money owed to? Is there some giant cosmic bank out there that the whole world is in debt to? Well, the answer is kind of surprising. For the most part, the debt is owed to ourselves. A huge chunk of it is held by regular American citizens who buy savings bonds, by pension funds that are managing your retirement, by other countries like Japan and China who see U.S. debt as a super safe investment, and even by other parts of the U.S. government itself.
And the main tool they use for all this borrowing is something called a government bond. It's really simple. It's just an IOU. When you buy a bond, you are literally lending the government money. In return, they promise to pay you back in the future with a little bit of interest. It's considered one of the safest investments on the entire planet, which is why so many people, companies, and entire countries are willing to lend the money. But, and this is a big but, not all debt is created equal. There is a massive, massive difference between how most of us experience debt and how the wealthy use it. For most people, debt is a burden, but for a select few, it's one of the most powerful financial tools you can imagine.
For the average person, debt usually means high-interest credit cards, car payments, student loans. It's a weight, right? It's something you're desperate to get rid of. But for the wealthy, it can be the exact opposite. It's a mechanism. It's about using low-interest loans not because you have to, but as a way to seize an opportunity.
So here's how it often works. Let's say you own $10 million in stocks. Now, if you sell some of those stocks to get cash, you're going to get hit with a massive tax bill on your profits.
So instead, you use that $10 million portfolio as collateral to get a super cheap loan from a bank. You get all the cash you need, tax-free, while your original $10 million in stocks is hopefully still sitting there growing in value. It's a strategy to unlock the value of your wealth without ever selling and triggering taxes.
Okay, so we've talked about inflation, we've talked about debt, we've talked about leverage. How does all this abstract stuff connect to the real world, to something that affects millions and millions of us every single day? Well, let's talk about the absolutely insane cost of housing. This chart right here, this tells a story that anyone trying to buy a home today feels deep in their bones. Since the 1970s, home prices have just blasted off into orbit. At the same time, average wages have, well, they've barely moved in comparison. The gap between what a person earns and what a home costs has become a giant, gaping chasm.
So what on earth caused this? It's really a perfect storm of a few different things. First, for decades, we just haven't been building enough new homes to keep up with demand. Second, you have large corporations and investment funds buying up huge numbers of single-family homes, treating them like a stock to be traded, not a place for a family to live. And finally, you had decades of super low interest rates, which made borrowing money really cheap. That poured rocket fuel on the fire, pushing prices higher and higher.
You know, when you boil it all down, all of these things, inflation, debt, the price of a house, they're all built on a foundation of trust. Money only has value because we all collectively agree that it does. It's a shared story that we all tell ourselves. And that leaves us with one final and really important question. In a system that can feel so complex and at times so unequal, what happens when our shared belief in that story starts to break down?